Good afternoon, everybody. Thank you for joining us today. Ocorian, we're here to talk about Ocorian and how we can assist you in providing support for your clients and providing structures in the offshore jurisdictions where we are present. I'm joined today by my colleagues, Kenny Kirpen, who heads up our private client team in Mauritius, and also Leon Kruger, who is our head of client services in Mauritius. From the Sasfin side, we're kindly joined by Sarah Simson, who many of you know, and will be joining us throughout the presentation as we go through. For those of you that don't know the Ocorian group, I'd like to start by saying that we are an international group. We've been present for a number of years. In fact, our history goes back to 1971. If we look at the true history of the group, although the Ocorian name was created in 2016 when it was separated from a legal firm that we were part of in the Channel Islands, and in particular Jersey. Today, growing from one single jurisdiction, we're actually present in over 20 jurisdictions. We have a team of over 1,500 people, and at last count, around 1,600 people actually across the globe. In fact, in our Mauritian office, we're currently at 359 people, and we hope to be 400 by the end of this year. We have a client base which is in excess of 8,000, emanating from private clients, corporate clients, institutional clients, fund clients. We're operating, or we're administering rather, over 17,000 different structures, and we're pleased to say that we help our clients to administer in excess of 270 billion US dollars. How do we do all that? I think the three key ingredients to what we do, and the reason for our success so far, is our people, our technology, and the process that we use to ensure that the glue stays together. We like to use the phrase one Ocorian because it's actually one mindset that allows us to operate seamlessly across all 23 different jurisdictions. When you engage with Kenny, Leon, or myself, rest assured that you're also speaking with our colleagues in many other jurisdictions. If it's not something that we can do in this particular office, we work closely with our colleagues in Jersey, in BVI, in Singapore, in Dubai, to make sure that we can find the right solutions for our clients. This slide here really just goes to show and emphasize the breadth of our global reach and our capabilities. We're as far north as Norway and Sweden, as far south as Mauritius, as far east as Hong Kong and Singapore, and as far west as New York, Cayman, BVI, Bermuda. But as I mentioned, we are one Ocorian. Obviously, time zones permitting, we're able to speak with ourselves, and quite frequently here in Mauritius, we're engaging with our colleagues out of our Bermudan office and equally out of our Singapore office. So we're nicely centered in the middle. For yourselves in South Africa, engaging with this office here in Mauritius will give you access to the whole group. The main service lines that we focus on across the group are corporates, funds, capital markets, private clients, and what we like to refer to as regulatory. Within our corporate space, it's very much about engaging with our corporate clients who are not all listed entities. Many of them are actually unlisted. Many are family-owned companies, family-owned businesses. Many of them are vehicles that are being used to separate different lines, different lines of business within family groups. And our role is to take care of all the administrative needs, the accounting, the compliance, the regulatory burden, to ensure that those companies remain in good standing with the regulators. On the fund side, equally, we look to work with a group of institutions, development finance institutions, families as well, to help set up first-time fund managers, second and also third-time funds as well, who we work with for many, many years. Many well-known names that you'll recognize being in South Africa already work with us. A lot of the development finance institutions coming to invest into the continent use our actual services to harness other investments from a different pool of different groups, and we take care of all the administrative and all the accounting needs on behalf of those types of funds. On the capital market side, this is something which is a specialism out of our London and Luxembourg office in particular. It's around the administration of debt instruments used to fund future growth for companies, and some future listings as well. On the regulatory side, whilst each of our offices have to abide by their own regulatory laws, we do offer legal services out of our Cayman, Bermuda and BVI offices. Each of our offices do have legal counsel internal. We do not give legal advice or tax advice. However, we do work closely with many legal firms across the globe to ensure that we can provide top level service to our clients. In this presentation today, obviously, we're going to focus more around the private clients space and the services that we offer the private clients. And that's really around the establishment of trusts and foundations and how companies can work with them. We work closely with family law firms. We work closely with tax advisors. We work very closely with first generation and second generation families to ensure that they've thought about the important aspects of estate planning and succession planning. I think the key for us is really getting to know our clients, getting to know you, the advisors, the managers who work closely with those clients, and seeing how we can use our services across the globe and in particular in this jurisdiction to actually provide a better solution for you. When we're looking at private clients, it really covers the whole aspect. It's around the compliance, it's around the the philanthropy, it's around the succession, it's around the estate planning, it's around what goals do the family have, business aspirations, what different lines of business does the family wish to grow into, what different lines of business the family think they need to exit from, and then how can we then interact with those families or entrepreneurs, even if they're not yet family structures, to actually help them to grow their businesses, to find the right partners that we can work with. If they're looking to raise funding for their business, who do we know in our network that can help them to actually do that? If they need any particular advice, how can we help them to ensure they can speak to the right people? Compliance and KYC and governance are all important in today's world, in particular when you've got cross-border transactions. Families looking to grow need to think about how do they attract funding into their business. We like to work with families who are looking to grow and expand, and how we can leverage from who we are across multiple jurisdictions. But the key criteria there is always going to be source of funds. Who are we working with? How do we validate new funds coming into a business? And that's really where we help to work. We actually help the advisors to ensure that we're adding best value to their clients. On the corporate side, as I mentioned, you'll see on the slide here, we cover the services across our European offices, our American offices, and of course, within Africa and Asia. You'll see some of the clients we work with, some of the well-known names. We are ourselves, backed by a group which is, which specialises in the growth of businesses. So we're always trying to share that experience, share those values with our clients, and trying to think about what added benefits can we bring. If it's how do we discuss employee incentives? How do we discuss the insurance requirements of our clients? If they need to consider maybe self-insuring, whether that's through creating a captive, how can we help them to find the right insurance manager to help them do that? How can we talk about what their actual insurance needs really are to help them grow that particular line of their business? At this stage, I'd like to introduce my colleague, Leon Kruger, who will talk a bit more about the client services team and how the glue comes together. Thank you.
John, thank you. Just before we move on to Leon, just a warm introduction to everyone who's joining us today. And Leon, before we move over to you, John, I think you dealt with some very interesting aspects. And, we've been finding that most of our clients have been considering building up an offshore portfolio, as well as estate planning advantages that trusts offer for intergenerational wealth preservation. And because of the growing popularity of offshore trusts and the numerous day-to-day queries that we get on the subject, I think we can delve more into the commonly asked questions that we get. And before we move on to Leon, I just wanted to address the fact that you showed us a sizable global footprint. And I think for the benefit of our audience, we just want to state that this discussion today is mostly focused on Jersey and Mauritius as a potential jurisdiction for setting up a trust. So thank you for giving us insight into Ocorian as a company and its massive global offering that offers clearly a myriad of services. Leon is joining us from the Mauritius team, and I think he's going to delve more into the Mauritius side of things. So a warm welcome to Leon, and please tell us a little bit about your Mauritius office.
Thank you very much, Sarah, and thank you, SASFIN team. So I'm Leon Kruger of either Leon Creer, actually from South Africa, but now residing in Mauritius. So I thought it well to give you guys a bit of an oversight of how we are structured in our Mauritius office. Perhaps if you missed it earlier on, John alluded to the fact that we have 359 people in our Mauritius office. So all of these employees are divided into different sub-teams. So we have a private client team, which is headed up by my colleague Kenny Kirpin on the school. Then we do have our 4 corporate teams. So that will be from your multinational companies or to your startup companies. From setup up until liquidation, winding up, we do provide all the services as per the slide John mentioned, showed you guys just before this one. And then we do have 2 fund teams. We call it 2 fund teams because the one is more in terms of private equity, which is your closed-ended funds, and the others are the open-ended CIS type of funds. So in each of these teams, we do have officers, senior officers, managers, and then associate directors. Up until the level of manager, we really try to see what we can do better for our clients, how we can be a bit more efficient, and making sure that they do get the world-class service that they are paying for. Then when we look at the associate director level, and then from myself, Kenny and John, we really try to see what we can do more for our clients. As John mentioned, we have about $280 billion of assets under our administration. So that brings a vast network of clients that we really try to link up with each other and where we try to help them to grow. So where this is a seminar and a chat about the trust side of things per se, there's a big value add that a lot of people that do establish the trust, they are entrepreneurs and they have their corporate structures in the back. So we can really also try and help clients to grow within each other. In the next slide that John will show us, you'll see, you'll have a quick glimpse of some of the clients that we do have in our portfolio in the Mauritius team specifically. John, if you can just...
I'm trying to. Unfortunately, I have a freeze on my side.
No problem. Well, whilst you're sorting that out, John, Leon, a lot of South Africans tend to view Mauritius as a jurisdiction that is a good jurisdiction of choice for setting up of trusts because of the ease of proximity and the easiness of trying to travel there to conduct trust business. What are your thoughts on this, and what can you add to this impression?
Certainly, I think it is quite easy, especially for South African clients. What makes it very easy is that you don't require a visa as well to travel. So the proximity, a 4-hour flight from South Africa without any travel restrictions, currently also pre-COVID and what exists now post-COVID is also the same. So we currently don't have any restrictions on that. So that is quite easy. The lifestyle and what you can get on the island as well is quite similar to what you get in South Africa. So it's a very easy to adapt as well. And then there's as well no language barrier. The time zones, all of these things really do play a role in Mauritius being a great jurisdiction for someone to set up a trust, other than the regulatory points that I'll touch on in a short while.
Okay, John, I see you've managed to sort out the slides. So you comfortable there? You're good? I
Yeah,
see
I have
that
to
you're
find a way
driving.
around it.
Okay.
Okay,
All right.
please carry on, Leon.
Okay, John. So yeah, I see it's not in presentation mode, but it's fine. So if you ask who are our clients in Mauritius, then it can be anything inbound into Africa and anything outbound of Africa into all of these different countries. So you'll note that we deal with basically all the countries around the globe. But what makes it interesting is if you pick up your cell phone, that manufacturer is probably our client. The fact that you guys have connectivity and Wi-Fi in South Africa, those are our clients. When you go to a hotel and you book into a hotel, most likely it's one of our clients. When you eat a snack on your flight towards Mauritius on the airplane, that is also some of our clients. When you take medication, you get a prescription in South Africa, the chances that that is one of our clients is also good. If you look at your auditors auditing your books, it might be our clients. So any mining, logistic, any of those companies, they are our clients. So this really just goes to show of the breadth of our clients, and that there's no client too big, there's no client too small, and there's no sector also that we don't work in. So we really do service a large suite of clients across the globe, anything inbound, outbound, Africa, or anything Africa for Africa. Mauritius is a preferred jurisdiction. So then the next slide that John will show us is just a bit about Mauritius at a glance. So Mauritius at a glance, we have about 1.3 million people living on the island. The language is anything between English and France, but I think nowadays I live in the Black River area, and I think they are thinking of renaming Black River to Swart Rivier. So I think Afrikaans can be added as a language as well in Mauritius. The literacy rate is quite high. It's extraordinary, actually, and per capita Mauritius has the most amount of accountants in the world. A good and steady GDP. But if we look at the business side of things, the double taxation agreements that we have in place, that is quite a nice number. Then as well, the investment promotion and protection agreements that we do have, and the bilateral investment treaties that Mauritius does have with other countries is also something that really makes it conducive for business. Plus, we do have a very good rating from Moody's, and we are also, I think, currently 13th on the World Bank's ease of doing business list. So that really is something that makes Mauritius a nice place to conduct your business from, or to set up from. John, perhaps if you can go into the next slide. Okay, so in terms of business opportunities, when people think of Mauritius, they think of cocktails, beaches, and hotels, and people really think that that is what our GDP is made up of. So if you look at this slide, you will note that tourism isn't our top sector. The financial services sector and the manufacturing sector, which makes up a quarter, those are the two dominant sectors for Mauritius. So why we show this is to give you an idea that Mauritius is a proper ecosystem. Some of the other IFCs, as we call it, the international financial centers, are purely built on just the financial services, or some of the other islands are purely just on their travel and tourism. So usually when we ask someone, what do you think in terms of GDP who contributes the most to the Mauritius GDP? They would say travel probably 50 to 70% of your GDP, which you can see here isn't the case. So you'll also see that it's well balanced. It's not weighted towards some or one sector, which also gives a good idea of the stability in Mauritius and the economic stability that Mauritius has as well. John, next slide, please. So just to sum up what I've already said to you guys in the previous slides, Mauritius is really well suited. It's bilingual between English and French. A lot of professionals, like I said, in terms of the accountants per capita. We have a hybrid legal system and a good functioning legal system in Mauritius as well. the access to a qualified and multi-skilled workforce is also something that's very attractive, especially to big companies operating in Mauritius as well. The time zone being GMT +4, that also helps a lot to do business around the world, and we can service clients in all different time zones. And then on the banking side, we really have a well-established banking infrastructure. And if you look at something like foreign exchange, there is no foreign exchange control. So that means that any amount of money that you want to flow in or out of Mauritius, you can do that without receiving, like you would in South Africa, need the SA Reserve Bank clearance on that. So for the next slides, I'm going to hand over to Sarah, perhaps to introduce Kenny, or Kenny.
Thank you, Leon, for that insight into Mauritius. And I must say, you mentioned Mauritius and cocktails. I, for one, do think Mauritius is synonymous with cocktails. But thank you for your insights. And we're going to hand over to Kenny now to take us through a more magnified look at different types of trusts, as well as the role players in a trust structure, and to perhaps contrast the Jersey Trust offering for us with the Mauritius Trust offering. Please enlighten us further, Kenny.
Thank you, Sarah, and the Sasfin team. Hi, everyone. First of all, what does a trust look like? A trust basically is an arrangement between an individual, who is normally called a settler, and the trustees. So between the two of them, the individual will be transferring assets on the name of the trustee. And by doing so, there will be a trust that will be settled. The trust will then hold these assets for the benefit of the beneficiaries, which will be identified by the settler, who is the individual who has set up the whole structure. Now, the other thing to bear in mind is that when you get into a relationship with a trustee, especially if you are getting into a relationship with Ocorian that you don't know about yet, it is important that an element of trust comes into place. And the law, either in Mauritius or internationally, provides for an appointment of a protector. Now, what is the role of the protector? The protector is basically someone that the settler trusts and has full confidence, whereby that protector will make sure that the trustees manages the affairs of the trust as per the wishes of the settler. And if ever that protector feels that the trustees are not doing what they are supposed to do, the protector has the power to change trustees. And in some circumstances as well, the protector will be guiding the trustees in terms of making sure that the objectives of the settler is met at all times, especially upon the demise of the settler, when we'll have to take care of the beneficiaries and make sure that the assets are properly distributed to the beneficiaries. So that's in a nutshell what a trust looks like. But now it is important to understand, why will someone look into setting up an offshore trust? There are various elements on the advantages of setting up an offshore trust. The first one is an element of confidentiality and asset protection. We have lots and lots of high net worth individuals. By virtue of the fact that they are high net worth individuals, they want to make sure that their family is protected, and their family is protected against any kind of people kidnapping them, for instance. We have that a lot in South American countries, but also a lot in the African continent as a whole. And by setting up an offshore trust and putting the assets in that offshore trust, it's a way to securing that assets, but it's a way as well to maintain their confidentiality. The other element which is important is protection against political uncertainty. We all from parts of the African continent, and we know that the political uncertainty, we live the political uncertainty on a daily basis. And by transferring the assets into an offshore trust, that's another way of protecting the assets on the short term, but also on the long term. The other important element is pre-immigration planning. So when someone is looking at immigrating to another country, very often there's an element of tax which is accompanied with that person prior or after the immigration. And we have seen in a number of cases that having an offshore trust and transferring the assets according to the right tax advice and methodology can make sure that it becomes more tax efficient for that person to move out of the country. The next one is an important one as well. Very often after the demise of an individual, it is then that the family needs to apply for what we call a probate in order that the children, the family can get access to the wealth or assets of that demised person. Probate can be a lengthy process. It can be costly as well. And by ensuring that you put your assets in an offshore trust structure, for instance, you can ensure that the succession is done seamlessly, and you can avoid that issue of probate. There's also the element of flexible heirship planning, which is important, especially when we talk of complicated families, big families, where you want to ensure that upon the demise of the matriarch or patriarch, I mean, the family remains bonded together. The harmony of the family is maintained. And by setting up an offshore trust structure, having trustees that understand your values, having trustees that understand the objectives that you want to incur to your family upon the demise, that's important as well. And having as well a protector that understands that will be working alongside of the trustee to make sure that that harmony in the family is maintained, so that there's no discussion at the time that a discussion or dispute at the time that the assets are being transferred to the beneficiaries according to your wishes. The next element is about separation of personal and business assets. So and it's especially for entrepreneurs, whereby they would want to ensure that their personal assets is not subject to any credit liability if ever their business does not go on well. And sometimes it is important that you have a separate offshore trust structure that secures your personal assets, bearing in mind that while setting up the offshore trust structure, that individual needs to make sure that at the time that the assets are being transferred into that trust, he's properly solvent and he can cater for all his personal liability. Okay. The next one is about inheritance planning for complicated families. We have within the African continent, but also around the globe, we have complicated families with maybe different spouses, children across the globe, and you want to make sure that you cater for their needs accordingly. Having a trust structure will ensure that the trustees cater for their needs accordingly, while making sure that that harmony and the distribution of assets are done fairly. We've also got cases where an offshore trust can be very helpful, especially if you have infirm dependent people that requires medical needs all the time. By putting in place an offshore trust and making sure that the trustee caters for all the medical needs of that infirm, that can be very useful as well. There are other people that set up a trust structure for philanthropy. They want to inject funds into the trust, but make sure that these funds are being used properly for charitable purposes. And the last thing is for fiscal planning. Having an offshore trust, doing the tax planning properly, and you can actually minimize your tax exposure in the country where you live. So these are the main advantages or the main reasons that we would think that it is important for someone to look at setting up an offshore trust. Now, when you set up an offshore trust, there are different assets that you can put into it. I'll give you some examples. So for instance, you can look into the settler might have a life insurance policy whereby he is the insured person, and that life insurance policy could actually be put into a trust, so that upon his or her demise, the proceeds of the insurance policy gets into the trust account, and it caters for the needs of the beneficiaries, the family members, as per the wishes of the settler. So that's one of the example. We also have the other example where SASFIN partners with us, whereby SASFIN provide their expertise in terms of investment portfolio management. So we have an individual can set up a trust and set up an investment portfolio account with SASFIN, and that investment portfolio account sits within the trust structure. And in these particular cases, for instance, what can happen is that all the income which is derived on an annual basis based on the return of the portfolio could be used to cater for the needs of the beneficiaries, for the family members. Just to give you an example, we have families who has their investment portfolio held in the trust, and they want to ensure that, for instance, the income which is derived is enough to cater for the educational needs of the children who are abroad, who are currently at universities. So that's an example as well. We have other assets that could be injected. So you could want to put real estate properties in it. You could have paintings in a trust. So there are different kind of assets that you can look into putting in a trust. At the end of the day, the trust is actually your personal tool to consolidate as many assets as possible in order to secure them, but also ensure that you have a good estate and succession planning in the future. The next slide is about giving a comparison of the trust law between Mauritius and Jersey. I know that a lot of people also make use of Jersey as a jurisdiction, but we wanted to just give you a comparison between the two of them. In terms of the trust law itself, both jurisdictions have the same trust law. The difference is the Jersey trust law has been in place for more than 150 years. The law in Mauritius has been enacted in 2001. So 21 years. Jersey as a jurisdictions, they obviously has the history, they've got the background, but in terms of the concept and the law, it's pretty much similar. Okay. I'll give you some of the main differences. So for instance, in Mauritius, when you set up a Mauritius trust, it is imperative that one of the trustees is licensed by the Financial Services Commission and is issued with a trustee license. The reason being is that in the past, when people were setting up trust structures in different jurisdictions, be it in Jersey, in the Channel Islands, or any part of the world, you will have individuals acting as trustee. And being a trustee, you could actually misuse your power if you have individual trustee that kind of divert in their duty, their fiduciary duty to act as trustees. When Mauritius had enacted their Trust Act in 2001, we wanted to make sure that that doesn't happen. And that's the reason why the law imposes that you have a trustee which is licensed by the Financial Services Commission. And if ever you fail in terms of your fiduciary duty, your license is automatically revoked, and you will have obviously penalties associated with that. The other difference is that there's a perpetuity period in Mauritius, which is 99 years. Jersey has amended their law 2 years ago so that there's no perpetuity period, so it can go on forever. Mauritius is looking at doing that as well, and hopefully by next year we'll have that in place similarly. In terms of reporting requirement, we have a reporting requirement that we need to do to the Mauritius Revenue Authority on an annual basis. By virtue of the fact that when you set up a trust in Mauritius and you have the settler and the beneficiaries not resident in Mauritius, the trust could be tax exempt. So the reporting requirement is basically to ensure that the trust that you set up in Mauritius is not does not incur any tax liability. Okay. The other difference is about there is what we call the Settler Reserve Powers Trust, which are not in Mauritius but in Jersey. It's a different type of trust, which basically gives quite a lot of powers when to the settler, especially when it comes to investment powers. We don't have that in Mauritius. We also wanted to just give you a difference between a Mauritius trust and a South African trust. Maybe John, if you can go into the next slide. So the first main difference is in terms of the law. So a Mauritius trust abides by the English common law, whereby in South Africa, when you set up a trust, there's a law of contract, which needs to be abided, and the law of contract states that it is imperative that you enter into a contractual arrangement between the two parties, which is the settler and the trustees. Whereas, as per the English common law, you can set up a trust by way of a common understanding and a note-taking. And most often, we set up the trust by way of what we call a trust deed, which basically states all the terms and conditions that needs to be abided by the trustee. In terms of the perpetuity law, so there's no perpetuity law in South Africa, so your trust can go on forever. But in Mauritius, as I mentioned earlier, we have 99 years, and hopefully that will be amended by next year. I would say that the main other reason will be in terms of taxation. So a South African trust, based on the assets which are transferred into it and the income derived, could be taxed at a level of up to 40%. Whereas in Mauritius, the income tax law in Mauritius allows for a trust to be tax exempt on the basis that the settler and the beneficiaries are not resident in Mauritius during one calendar year. The other difference is that in terms of addition and removal of beneficiaries, by virtue of the fact that a South African trust abides by a law of contract, it is difficult to add and remove a beneficiary, whereby a Mauritius trust with its English common law, you have powers within the trust deed, whereby the trustee has that flexibility to add or remove beneficiaries based on the understanding with the settler. That's the main difference, Sarah, between the Mauritius trust and the South African trust. Any questions that you have at this point in time, Sarah, from your side?
So yes, a question has come up regarding who a protector would normally be. Generally, it would be someone who's not a beneficiary or a trustee, as us South Africans know it. But would you be able to comment on, a lot of clients ask us whether they could be the protector themselves?
Mm-hmm. From a legal point of view, there's no restriction about the settler being a protector, but it kind of defeats the purpose, because the role of the protector is basically to act as a watchdog upon mainly the demise of the settler. So I would say that during the lifetime of the settler, it is not mandatory to have a protector, but what the settler can already stipulate is that if something happens to me, then I would like X person to be automatically named as a protector. that person has to be completely independent, because that person will not form part of the beneficiary of the trust. Otherwise, there will be a conflict of interest. And that person needs to know the objectives that the settler has set up initially when the trust was put in place. And who can be a protector? It can be an individual, but sometimes as well, we have law firms being appointed as protector. The reason being is that you have a lot of individuals who has had their lawyer or the law firm accompanying them all their life. So it is easier to put them as the protector, as they know the will, they know the wishes, and they know the family circumstances.
Thank you, Kenny. I think that answers that. Please do continue.
The next one is about what needs to be considered when you set up a trust. There are some important aspects that needs to be looked for. First of all, you need to understand what are the assets to be transferred into the trust, and is there any triggering of taxes which is accompanied to it? The reason being is that when you transfer assets into the trust, you are actually transferring the ownership of these assets from your individual name to the trust structure. So there's a transfer of assets, and that could trigger capital gains tax. And some of the assets which comes into mind straight away, it's about transferring a property into a trust, or shares of a company into a trust. When it comes to shares of a company into the trust, one thing to bear in mind is that if you, for instance, you have a company based in Mauritius and you want to transfer it into a trust, there's no capital gains tax in Mauritius. So the transfer of that company shares will be done without tax issues. But for instance, if you have a company based in South Africa and you want to transfer the ownership of the company into an offshore trust, be it in Jersey or in Mauritius, for instance, there will be a capital gains tax accompanied to that. So that's the first element to bear in mind when setting up an offshore trust. The second element is the element of exchange control regulation and the ongoing reporting requirement. So when you transfer assets outside of South Africa into an offshore trust, you need to have the approval of SARS, and there might be ongoing reporting requirements, so bear this in mind as well. In terms of gift and inheritance tax, so by gifting assets to an offshore trust or making a donation to an offshore trust, there might be gift tax and donation tax accompanied to that. So that's another important element to bear in mind. And it all depends where the assets are based as well. So maybe the assets are not necessarily based, all of them in South Africa. It could be based in the UK, in the US, or even in Australia, or whichever part of the world. Always bear in mind that there might be a gift tax or donation tax accompanied to it. In terms of beneficiaries that they need to look at for, is that if tomorrow the trustee is going to make an income distribution or a capital distribution to that beneficiary needs to understand that any income or capital distribution made to them can be looked at as a personal income for them, and they will be taxed on that distribution based on where they currently reside. Okay. The next point is about FATCA CRS reporting. So it mainly implies each time there's an income or capital distribution made to that beneficiary, depending on where the beneficiary is tax resident, there's a reporting which is being made to the Mauritius Revenue Authority or the Guernsey or the Jersey Revenue Authority to the authorities where these beneficiaries are tax resident. And the last thing is about the FATF consideration. So the FATF consideration is mainly in terms of if there's a jurisdiction which is on the grey list or the black list, taking into consideration that when assets are transferred to that jurisdiction, there might be a reporting requirement attached to that. Mauritius and Jersey actually is not on the FATF list, and that's good. We were on that last year, but we managed to get out of it, which is a good thing. And Jersey as well has not been on that yet. Leon or John, you wanted to say anything on the FATF consideration as well?
I'm going to interject here, Kenny, before we do hand over to Leon and John to give us some insights into that. You made mention of FATF. That's an overly sensitive subject for us South Africans right now. Obviously, we know that Mauritius has had its own struggles with this, but actually came out winning. Do you think that this could play a part in driving an increased interest into offshore investment through trust vehicles?
Yes, indeed. I mean, when you are on the grey list or the black list of the European Union, you are on the spotlight of most of the jurisdictions. And by securing your assets in a jurisdiction which is whitelisted, you kind of make sure that whatever assets that has been transferred into that trust structure is secured, will be well maintained, and will not be subject to any kind of stringent regulation when it comes to making use of that assets without you being aware of anything. The other thing is that from a transactional point of view, when you are on a grey list and you want to transfer funds outside to another country, some of the corresponding bank, they actually blacklist you. And they are not willing to accept any transfer of assets. And that's something to bear in mind. So in South Africa, for instance, you got the exchange control, which is one thing. But secondly, if you are on that grey list and you want to transfer assets, for instance, in Europe, in the UK, or in the US, you might have difficulty in doing so.
Thank you for that, Kenny. And I see that we do have a question in the chat box, which notes that it was mentioned a little earlier that a Mauritian trust, not tax exempt, but those were the words used. In South Africa, the beneficiaries are taxed as if the trust is a conduit. Does the same apply with respect to the Mauritian trust? In other words, will the beneficiaries or settler be ultimately taxed in South Africa after declaring in their tax returns that they have a trust in Mauritius and have received a distribution? So before we do go into this, firstly, this session is not intended to provide tax advice, but the very short answer is that as a South African tax resident in South Africa, you would be subject to normal gross income tax laws. Kenny, I don't know if you want to discuss the nature of a distribution received by a beneficiary a little bit further, though.
So when a distribution is made out of Mauritius, like I said, if the settler and the beneficiaries are not based in Mauritius, there's no implication from a Mauritius point of view when a distribution is made out of the trust. However, it all depends where the beneficiary is residing. So if the beneficiary is residing in South Africa, when the funds will be transferred into his or her South African account as a distribution, the individual will be taxed on that distribution as if it was a personal income.
And I think it's fair to add to that, to answer the question surrounding the settler, is that a settler or a founder does need to be very conscientious of the manner in which they fund their trust, because that could potentially have a tax effect. So whilst we aren't going to go into further detail in this discussion, please be aware that funding makes a difference. Each choice or election in respect to funding ends up in another tax consequence, so to speak. So to answer that question, please do take advice. This is so intricate that the nature of our response right now would not be sufficient to answer that in totality. Now, I think before we move over to John Kenny, one of the most repeated questions that we get is, how do I select an appropriate jurisdiction to set up a trust? We in South Africa are faced with a multitude of choices, and this can be really confusing. Could you perhaps unwrap some of the considerations that we would take into account?
Yes, sure. So the first question is about proximity of your trustee. I think you need to ensure that at least on an annual basis, if you need to reach out to your trustee, you know where the trustee is sitting. The second question that you need to ask yourself is, where do you find yourself in 5 years? Where will your children be residing in 5 years' time, in the short term or long term? And by asking that question, you need to make sure that wherever the trustee is sitting, which means your trust will be established, they will be able to take care of the beneficiaries' needs very quickly, and the beneficiaries know how to reach out to them. The third element to bear in mind is the cost associated into setting up a trust structure. So if, for instance, we need to compare Mauritius with Jersey, Mauritius is more cost effective to open and maintain a trust structure on the long term. Jersey will be on the high side. They are based in Europe and the cost is higher. So that's a third element to take into consideration. And obviously, if for instance, you're based in South Africa, you know your trustee is in Mauritius, now and then you can come and do meetings in Mauritius to make sure that you have working sessions with the trustees in Mauritius. If you have to go to Jersey, it's a long flight, it can be more costly to go to Jersey, and it might not be appropriate. I'm just giving two jurisdictions because we've talked about Mauritius and Jersey, but the similar question needs to be asked if you want to set up a trust in the Isle of Man, in Hong Kong, in Singapore, in the US, in Cayman Islands. So I would say similar type of question needs to be answered.
Thank you. And another question that comes up is, what type of flexibility would Mauritius offer if you did set up a trust in Mauritius in terms of flexibility if a client wanted to opt out of it?
Yeah. So when you set up a trust, it is set up according to the common law, and it is set up by way of what we call a trust deed, a trust instrument. Within the trust deed, there are clauses in it which basically state, because circumstances of life changes over time, and maybe today that's the right thing to do to set up a trust, but in a couple of years you might not need a trust anymore. And the clauses in the trust instrument allows you to close down the trust and the money transferred back into your ownership. Okay, so that's an important element. The other thing to bear in mind is that if you set up a trust in Mauritius today, and then tomorrow you decide to go and live in another country, and you find out that the Mauritius trust might not be the right solution for you, the law in Mauritius allows for redomiciliation, so you don't need to wind up your trust. You just need to redomicile your trust to another jurisdictions, which will be more favorable to you. That will be more cost effective as well for you, rather than winding up a trust and then setting up a new trust somewhere else.
Thank you, Kenny. I think a sidebar comment to that is that clients need to be very conscientious regarding where the members of their family live and where they intend to live. And in electing that jurisdiction, they do need to be aware that they may have to have a change of jurisdiction, and this flexibility provides for a family becoming more of a diasporic family than they previously were. So that is good to know. Thank you, Kenny. John, can you perhaps briefly take us through how easy it is to apply for the setup of a trust with Ocorian?
Absolutely. Thank you very much, Sarah. Thank you, Kenny. So in terms of the documentation, it is very, very straightforward. There are 4 key documents that we actually request. And those documents are the same regardless of whether the trust is going to be used for holding a life policy, and a pool of investments such as an investment portfolio, or indeed an investment company. Excuse me. The documentation really is just covering around what we call an individual details form, where we look to understand exactly who we're engaging with, their background, any source of funds that are going to be placed into the actual trust itself. The questionnaire form, which really goes towards understanding who any of the beneficiaries are going to be, if they're of a minor age or of adult age, and if we need to collect KYC on them as adults, to actually do so. The template confirmation letter is really around just understanding, what they're trying to achieve, maybe a brief outline of a letter of wishes. There's a signed CV, which if they are able to actually use a LinkedIn profile, then just print that off and sign that. That will suffice as a signed CV. And then there's a tax compliance declaration form, which is just confirming their tax status and where they are actually tax liable. One of the points I did want to raise, though, with yourself, Sarah, is around the letter of wishes, in the sense that this is something which I think would be very good for clients to know, whether SASFin can assist them in actually preparing that from your side, and then obviously that can be the bridge into Ocorian.
So very much so. We do participate in assisting clients with this journey. And if we've got a client that wants to move funding in and wants us to handhold them in terms of putting together a list of the things that they'd want to consider when they do draw up a letter of wishes, we do that for our clients as well.
Thank you, Sarah. I know that on our side, we do provide templates. Kenny and the team have quite a lot of experience in listening to different clients' needs. No surprise, and I'm sure you won't be surprised that because of the breadth of our clients, there are certain nuances in terms of different cultures, different expectations of how assets should be diverted, sort of split across the family. So we do have a lot of experience in that particular space.
Yes, of course. And I mean, in terms of our relationship with SASFin clients and the relationship that our portfolio managers and financial advisors have with their clients, very often we get to understand aspects of the family that wouldn't be immediately understandable to an external party. So interacting with us and chatting to us gives us the ability to assist you through that journey and perhaps give you some pointers on things that you would want to include in the letter of wishes. Thank you for showing us the paperwork. It does look very easy. And I think we can hand over to Leon. I think you guys have mentioned quite a bit regarding why South African would consider an offshore entity in Mauritius, but perhaps there's some closing points that you want to add.
Thank you very much, Sarah. I think most of it has already been covered, especially that on the left-hand side. A big plus for South Africans specifically also is the taxes in Mauritius. So no capital gains tax, no dividend tax and interest withholding tax, or share transfer tax. There's free repatriation of profits, dividends, capital. There's no estate duty, inheritance or wealth tax in Mauritius. There's no exchange controls, like I mentioned earlier, and a flat corporate income tax of 15%. And you can also avail of the partial exemption regime, which will effectively bring your tax rate down to 3% if you tick certain boxes on that. And one thing that people tend to think that if you want to move to Mauritius and relocate as well to Mauritius to come and live here, that you have to buy a property in Mauritius to obtain your residency. Well, that is partly true because that is a route and how you can do that. But another preferred one that we've seen is where clients that are really entrepreneurs or running a company, that they set up shop in Mauritius. They set up a company, whether it's a GBL or any other form of that, and then they do employ themselves through that company, and by way of the employment they gain a occupational permit, which then is a residency permit as well. So you don't need to go and buy property of, currently it's $385,000, which is about 6 million rand. You can also incorporate a new entity. So that is a more or less our story today as well. Myself and John and Kenny, we jump on a lot of calls with clients. So if any of you guys want us on a call where we really explain the 101 or the ABCs to your clients, then we are more than happy to do that. And I want to invite you guys as well, if there's a few minutes that you do have some questions for Kenny and for John and myself, then we are more than happy to answer the questions. So I think, Sarah, you perhaps have 2 questions that you can direct at us.
Yes, I'm currently manning the chat box and there are a few questions. I'm going to deal with just a few of them. So Kenny, you made mention of different types of trusts. I think as South Africans, we've got quite an interest in what kind of trusts that could be set up potentially that you don't make use of during your lifetime. What sort of options can Ocorian assist with if you're looking at a bottom trust straw solution?
So in terms of trust structures, you can set up a few of them. So the first one, which is the most common one, is called a discretionary trust structure, whereby you can have multiple assets in it. But there are also instances whereby there's only one asset that will be transferred in it. And for that purpose, you can just set up what we call a purpose trust, which will just be set up for the specific needs of holding one asset. And what type of assets will it be? For instance, holding just a life insurance policy, which we call a bottom draw trust, or also a short form trust. In a nutshell, that could be the option. There's also what we call the a charitable trust. If you are going to set up a trust mainly for philanthropy, you can also set up in an infirm purpose trust vehicle just to cater for medical needs of families. So there are different types of trusts that you can set up. You can also set up what we call the purpose trust company vehicle, which will be basically acting as trustee of a company. And rather than having a third party acting as trustee, you set up a purpose trust vehicle to act as trustee of your trust. That's in a nutshell what we have in Mauritius. In other jurisdictions, you can have more trust structures. If I do a comparison with Jersey, on top of what I've just mentioned, you will also have what we call the Settler Reserve Powers Trust, which provides investment powers to settlers.
Thank you very much, gents. We actually don't even have time for the very last question, so we will be in touch with people who have raised those questions to answer them. And to our valued audience, whilst we always endeavour to bring you insight into information that's topical and relevant, the session really shares minor incremental details that make up the trust regulatory and legal framework. So we do urge you not to base any of your planning on excerpts from the session that may be construed incorrectly in isolation without the full benefit of the relevancy of the applicable facts and circumstances. The session is intended to assist you in formulating questions that need to be asked in order to engage rather with your portfolio manager and with your financial advisor, rather than trying to take the excerpts and apply it to your own circumstances. So please do not do that. Thank you very much for attending our webinar today. And we hope you found it informative and of practical use. A recording of the webinar is going to be sent to anyone who subscribed in the next week or so. And a recording is also going to be available on the Sasfin Wealth's content tab for future reference. So thank you very much to John, Kenny, and Leon as well for sharing their knowledge and expertise with us today. Now, for Sasfin clients that want more information, please contact your portfolio manager or your financial advisor or the Sasfin Fiduciary team. You are also welcome to get in touch with the team. Leon's details are on the screen there if you want to take them down now, and you may contact them to ask further queries that we are not able to assist you with. I hope you enjoy the rest of your day, and I hope to see you all at the next webinar. Thank you.
Thank you for your time.